Um, Evening and welcome to today's class. That is what we call the advanced taxation. The advanced taxation. So we were doing on what we call the revision. We were doing the revision, and I did what we call the taxation of petroleum companies. We also did on what we call the taxation of the real estate. So I want to just continue by still doing the revision. Continue by doing also more revision of the same. I'll do in the case of partnerships. Do now in the case of partnerships. We do in the cases of partnerships. And now do case of partnerships. So for partnership, we can do in the sitting off. Then some of them we did in the class. Let me just do on August 2023, question number 2A. You can do August 2023, question 2A. Do August 2023, question number 2A. You can do that one. The August 2023, we do question 2A. The advanced taxation paper, we do on August 2022. This is the advanced taxation paper. Advanced taxation paper. Blocks. So we are doing on partnerships. So I've said we do August 2023. Can do on August 2023. August 2023, 2A. August 2023, question 2A. This is what you were given. August 2023, question number 2A. You were given that E and K commence trading as partner under the name EK Enterprises on 1st of January 2022. They share profits and losses equally and were entitled to receive monthly salaries of 240 and 288,000 for E and K respectively. Given that the partners did not maintain a complete set of accounts, and the following is a summary of partners' bank statement for the year ended 31st December 2022. We have the bank summary on the receipts, and we also have the payments. Additional information is that as at 31st December 2022, the partnership owed suppliers 9,360, while the amount owed by the customers were 10,740. Given also for the part of the rebate received from the suppliers amounted to 1,590. You have the discount allowed to customers amounted to 1,460. We've also been given there that the bad debts amounted to 984, out of which 240 relate to the loan advance to him that was overdue. Closing stock was 7,440. And included in the interest expense is interest on partners' capital contribution at the rate of 8% per annum. Annual rent for the go down is 5.4 million. As 31st December 2022, electricity and insurance owing amounted to 300,000 and 153 respectively. Following payments were made in cash from the cashes before banking, given all those expenses there. So you are required to compute the adjusted taxable or partnership profit or loss, and then also the distribution, that is the allocation schedule. Now, what I'll do in this case, remember this is in case of what we call the incomplete records. And in the case of incomplete records, remember we have to begin with the sales. And now that we don't have the sales, we have to maintain the debtors account. The debtors account. Purpose of the debtors account is to help us to know what was our credit sales and also be able to know what was our credit what. What we maintain also the creditors account to know what will be our credit purchases. So we'll begin with the balance brought down. They started the business this year. There was nothing here. What we know here, we maintain the credit sales, meaning that the balancing figure on the debtors will be the credit sales. So you'll go to the receipts. There was a receipt from the bank that was on the bank statement. The receipt there they received was 62,400. Yeah, 62,400. On additional information, number 2, there was a discount allowed. Number 1, there was a balance as at the year end. What was due to customers, and what was due to customers was 10,740. That is for the creditors. Here we also have the discount allowed. The discount allowed. The discount allowed is of how much? We know we allow discount to customers, and this one was amounting to how much? Discount allowed was 14.16. There was also what we call the bad debts on additional information number 3. Now, bad debts, we were told that it amounted to 984. And we were told that 240 relate to the loan. Here we want only what related to the customer, which will be 984. I will less the 240. This will be 700 and what? 744. So if you balance here, our balancing figure is what will be our credit sales, which will be equals to how much? It will be equals to 62,400, 1416, 744, 10,740. This is 75,300. So this will be 75,300. So that means our credit sales is 75,300. That is on that. We'll also maintain for what we call the creditors account. We'll also maintain a creditors account so that we can be able to know what was our credit purchases. So creditors account. Creditors account. So on the creditors account, the balance, this is a liability. The balance brought down will be on the credit side. Here we are maintaining what we call a credit what? Credit purchases. So we go to the bank statement, see the payment that were made to suppliers, which was through the bank. He made how much to the bank? To the bank, he made a payment of 118,800. 118,800 is what we were given the payment to the supplier. There was also the discount, which was a rebate to the supplier. The discount received, which is 1,590. And again, also the other thing that we were having is on additional information number 1, the balance carried down. Balance carried down in our case, we've been given there. We were given that it was balance carried down on number 1, 9360. So if you balance here, what we get is what we call in the credit what? The credit purchases, which will be equals to how much? 118,800, 1,590, 9360. This is 129,750. 129,750 is what will be our credit purchases. Our credit purchases. So having now gotten that, now we can prepare the taxable profits. So this will be EK Enterprises. The EK Enterprises. This is a computation of taxable profit or loss. Profit or loss. This is for the year ended when? For the year ended. This should be for the year ended 31st December 2022. December 2022. The year ended 31st December 2022. So I will have the shillings here in thousands. So we'll begin with the sales here. On the receipts, we had the cash sales, which were of how much? The receipts like the sales were 122,400. Now also the credit purchases, credit sales, sorry, which will be given by 75,300. So you get the total. Get the total, which is our net sales. So what was our net sales? Or generally the total sales? 122,400 plus 75,300. It is 197,700. From there, we're supposed to less the cost of sales. Cost of sales. Now we'll get the cost of sales. Cost of sales comprises of the opening stock, which is the opening inventory. We did not begin with any stock as at the beginning of the year. So I should add the purchases. Purchases, we were not given the cash purchases. What we have in is just the credit purchases, which was 129,750. And then I will less the closing stock, which is the inventory. As at the end of the year on additional information number 4, it is 7440. So what will be our cost of sales? It will be 129,750 minus 7440, which is 122,310. So what I get here is the gross profits. You get the gross profits. So our gross profit is 197,700. 122,310. It is 75,390. From there, we'll only add the taxable income. Add the taxable income. And the taxable income that I'm only having here is the dividend. I mean, the discount received. The discount received, or the rebate that was received. That was on additional information number 2, which was of 1590. From there, what I will list now is what we call the allowable expenses. It only less the allowable expenses. So for the allowable expenses, I will begin with the ones in the additional information. I will begin with additional information number 2. There was a discount allowed. That is an allowable expense, which amounted to how much? The discount allowed was, this was 1416. On additional information number 3, there was also the bad debts. The bad debts. Now, the bad debts, I will only consider those that were written off, not those that are relating to one of the partners. So it was only 744. That is what will be the bad debts. From there, we'll also go to additional information number 5 on salaries and wages. Salaries and wages. Now, the salaries and wages, what was paid? On the salaries and wages, we were told that it included, it was 10,680. 10,680. I will add the one that was paid on additional information number 9. They paid of 1944. Then I will eliminate, since it included the salaries to partners. That is from the first paragraph. When you look at the first paragraph there was a monthly salary of 240 and 288. So I will less on both. The 240, you multiply by 12. This should be 2280. 2880 plus the other one will be 288 I multiply by 12. I have to get it per annum, which in this case here it will be how much? 10,680 plus 1944 minus 2880 and also the 3456. So we get in 6288. The salaries to partners, that is a disallowable expenses because those are personal expenses. Now, included in the interest expense, we have now the interest expense. When you look at the interest expense is what was paid of 7344. So we were told that they included a capital of 8%. Those are personal expenses. So I need 8% of their total capital here, which is on receipts. Capital that was introduced was 42 plus 72, which will be how much? 42 plus 30, that is 72,000. So I will also eliminate that. So 72,000, 8%, then 7344 minus answer. This will be 1584. Because interest on capital, that is a disallowable, the disallowable expense. Go to additional information number 7. We were given the annual rent for the go down. Rent for the go down. Annual rent for the go down is 5,400, and that is what I should be able to consider, the 5,400. What was paid there is 4,500, meaning that there is an accrual. However, we incur the expense, we include the expense that has been incurred during the year. Additional information number 5. We have the electricity. We are told that electricity and insurance are owing, meaning that it is accrued. So I will have the electricity bill was 540. No, for the owing it is not paid. Therefore, we consider rate here we add. Remember, we have to recognize as an expense when it is incurred. So I'll also do the same for the insurance. I'll do the same for the insurance. Insurance was of how much? Insurance was 750. I will add 153.6 to give you how much? 750 plus 153.6. This is the 903.6. That one is also, that one is an additional information number 9. These are now the expenses that were paid in cash. We have the motor vehicle expenses. Motor vehicle expenses. The motor vehicle expenses there is 1656 per annum. We also have the sundry expenses. The sundry expenses. Sundry expenses we were given per annum is 420. That is as per the additional information number 9. So from there, we continue. I've seen on motor vehicle expense, there was one that was paid through the bank. So what I will do, I will take the one that was paid through the bank, which was 2022 motor vehicle expense. There was a 2022. I will just add that one that was paid through the cash of 1656. 2022 plus 1656. This is 3678. We also have now on the balances, any other expense that is being paid there. We talked about there is the repairs and maintenance. Only the allowable expenses is what we are considering. Repairs and maintenance. Repair and maintenance was of 5320. We also have what we call the general what? The general expenses of 2616. General expenses. This is of 2616. Another one we also have is delivery fund, that is a capital expenditure. Fines and penalties. Fines and penalties, we know those are disallowable what? Disallowable expenses. Fines and penalties are disallowable expenses. Medical expenses are allowable expenses. Medical expenses. Medical expenses of 7560. Medical expenses of 7560. So from there, we'll now look on what we call the capital allowances. The capital allowances, less the capital allowances as well. Capital allowances here we only have on the office equipment. The office equipment. Office equipment, this is a 10%. So it will be 22,500. You multiply by 10%. This will be 2250. You will also, you can first get this total here. So that will come in less that. And you also less for the delivery fund. Delivery fund is at 25%. So you just take 25% of the 36,000. Will give you how much? 36,000. Delivery fund of 36,000, which is 9,000. So get the taxable profits. First, I can get the total expenses. 62, 1584, 5400, 840, 903.6. We'll also have the other one is that is 678, 420, 320, 2616, 560. So each one you less 36, 769.6. Then that means it is 75,390 minus you add 1590 minus answer minus 2250 minus 9,000. This is 28,960.4. That is the adjusted taxable profit. Should be the taxable profits. Should give you the taxable profits. The taxable profits. That is what should give us the taxable profits. Taxable profit. Oh, there is a mistake that I've done. I've not considered the other cash sales on additional information number 1. I've only considered those that were banked because we were told that the payments were made in cash from the cash sales before banking. So this is what remained after banking. What I need to know is before banking, what are these other sales that were there? So in this case, I need to know the total other cash sales there that I have not considered. Yeah, there is those other cash sales that we've not been able to consider. Yeah, this one will be, I will take 1656. You add 1944. You also add 420. I will add the drawing there. 86.4 you multiply by 52. 4 times 52. This is 4492.8. And then I will also add the other one, 46.8 times 52. This is 2433.6. So that one I've not considered that. So I can consider this one. So it will be 1656, 1944, 420, 4492.8 plus 2433.6. So I should add 122,400. I need to add 109. That is 109.6.4. Yeah, this is what I should have added. So 122,400. You add answer. This should be, 122,400. I should add 10,946.4. This should be 134, 133, 346.4. Yeah, that is a mistake that I had done. 75,300. My idea, this should now be 208. 646.4. So that now I minus 122,310. You will now get the 86,336.4 plus 1590. Then I minus 36. 769.6, 2259,000. Yeah, this should be now 39,906.8. 39,906.8. So we can now do Roman 2. This is the 10,946.4. Now, number 2 is on what we call the allocation schedule. Allocation schedule. We are having two partners here. We have E, and we also have the K, and I will need to have the total here. So EK, shillings we are using in thousands, shillings in thousands, and then shillings in what? Shillings in thousands. So we'll begin with the profit, the salaries. I'll begin with the salaries. Salaries on additional information, number 1. We were given for the monthly salary here is 240 for E. Multiplied by 12. 40 multiplied by 12 is 2880. And the other partner was having 3456. Then I can get the total, which will be 6336. We had also the interest on capital. Interest on capital, which was 8%. So for capital introduced by E was 42, multiplied by 8%, this will be 3360. And that one introduced 30,000 from the bank statement summary. So if I add all that, this is 5760. We don't have anything else. What we need is to get the profit share. So this will be on the basis of the taxable what? The taxable profits. Our taxable profits here we have is 39,906.8. So you will minus all these items to know the balance here. And then we will share to them using their profit and loss what? Sharing ratio. So you'll have 39,906.8, 5760, 6336. This one I'm getting 27,810.8. And then we can share them using their profit and loss sharing ratio. They are sharing it equally. So I'll just divide by 2. You are to part of 3905.4. 13905. So you can get the total there. Can get the total, which in this case it will be 2880, 3360, 13. So you are to part of 20, 145.4. That one is having 3456,2400. You have 3905.4, which is 19,761.4. Here is now where we add what we call the specified sources of income or the specific income. And from the receipts, we had the dividend, and this was net. So I'll have the dividend here, which was 2,400. Now, dividend from what we call the cooperative societies, subject to what we call withholding tax of 15%, meaning that what is here is still 0.85. So I will divide by 0.85 and then I share it equally. This will be 12,000, 12,000. And therefore, adjusted taxable profits. Taxable profits for each of the partner. This will be how much? This will be 32, 145.4. This will be 29, 31. This will be 31, 761.4. 31, 761. That is how you are required to do on that question. That is how you are required to do on that particular question. We were required to do on that particular question. That is how you are to do on that particular question. So we continue. I can also use that same paper. Can also use the same paper, and I do in the sitting of in question number 5, or we did this in class. No, I didn't do this in class. Or I did. I don't think so. We this one I think we did. Johnson, sorry, no. On back duty and tax investigation. Can do on that. The back duty and tax investigations. do on back duty and tax investigations. Back duty. Investigation. I'll still do that question in August 2023. Let me do question number 5C. 5C. August 2023, we do question number 5C. So Johnson Sauri has been not maintaining proper books of account, and since the inception of his business in 2019, balances were obtained from the valuable business records for 4 years, ended 31st December 2022. Given the leasehold property, motor vehicle, furnitures, bank overdraft, loss on sale of investments, we have the mortgage, inventory, computers, bank account, and personal expenses. This one comes out as if we did in the class, but generally for the sake of those that were not there, I just do it. Following additional information was obtained, drawings of goods and provision for taxation. The year 2019 we've been given there, and 2020 respectively. We were given that it has been accumulating at the rate of 10% per annum. We've been given there the capital allowances were agreed at the total of 920 for each of the 4 years. Donation to political parties we've been given there. You also have the gifts from the relatives. Contingent liabilities in respect to our pending legal court case. Rent paid on behalf of the close friend, we have it there. Living expenses estimated to that. And you are required to compute the taxable profit on the same. So this is Johnson Shauri. The Johnson Sauri. We normally maintain what we call a capital statement. The capital statement, and this should be for the year ended when? The year ended. Should be for the year ended when? Should be for the year ended, 31st December 2020, 2021, 2022. This is 2021 and 2022. So we'll maintain that. So however, in this case, I will need to have from the 2019, because here we use what we call the net growth. So I will have 2019 here. I will have for 2020. I will have for 2021. And I will also have for 2022. Now shillings in thousands. The shillings in thousands. Shillings in thousands. And then we'll also have for the shillings in thousands. So we begin with the, now in the exam you don't copy all the assets alone, just get the total assets. You also get the total liabilities. So I'll begin with the total assets. Just get the total. So the total assets in 2019 We have the resort property of 1168. We also have the motor vehicle of 5040, furnitures of 864. We also have the account receivable of 432. I have the inventory of 620. I also have the computers of 620, the bank account of 240, the bank account of 240, and then the personal expenses of 60, the personal clothes. Those are assets. So this will be 19,636. 11,760 there. 5040 for the motor vehicle. 864 for the furniture. We also have 504 for the receivable. We also have 572, 720 computers, the bank 268, personal expenses of 80, 19,808, 808. Continue. Or I've used 5720, should be 4720. Here I've used a loan value, 864. You add 504. You add 572, 720, 268, 80. Yeah, it should be 19,488. 19,488. The other one here should be 11,760. 9360 plus 864. You add 408, 482, 840, 272. Then you have entry 24,086. That one you'll also do the sum is 11,760, 10,760, 864. Add 600, 520, 720, 286, 120, 25, 630. So you'll also get the total liabilities the same way. So that we want to know what was the net growth. That after you get the growth, from there you can be able to know what was the growth in what? Net worth. So the liabilities here we were given 12,088. That is the bank overdraft. Mortgage loan of 2080. Yeah, 12,080. Don't have any other thing. It's only those two items. So this is 3368. 3368. And also do the same for this other one, 1400. You will add 1840. Here it will be given how much? 3240. The other one we have is 1210, 1620, 2830, 2830. The other one is it is 1115 plus 1500, 2615, 2615. So we can get the net growth. The net growth or the net income which will be 636 minus 33, 68. This is 16,268. 19,488 minus 3240. This is 16,248. That one is 24,086 minus 2830, which is 21,256. 25, 630, 2615. This is 23,015. From there, we'll get the growth in net worth. The growth in net worth. Net worth. It is just the difference here. So this will be 16,248 minus 16,268. This is a negative 20. From there, it's 21,256, 16,248. This is a 5,008. 23,015 minus 21,256. This is 17,59. That is the growth in net worth. From there, we'll add back disallowable what? Expenses. Add back the disallowable expenses. So disallowable expenses, I will begin with additional information number 1. We were given the drawings of goods. You know, drawing, those are disallowable what? Expenses. So drawings of goods. So drawings of goods. Remember, we only need to 2020, 2021, and 2022. We were told that this one in year 2019 here is 600. So for 2021, you add 1.1, 600 times 1.1, it will be 660. Answer, you multiply by 660 times 1.1, it is 726. Multiply by 1.1. This is 798.6. It is growing annually by 10%. We also have the provision for taxation. We know the provisions and tax expenses are disallowable. In 2019, it was 360. Grow it by 1.1%, should be 396. I'll multiply by 1.1 for 35.6. And then also 1 by 1. This is 479.16. From there, we continue additional information number 2. Those are the capital allowances, which is what we'll be able to less on that. Capital allowances. We're also given the donation to political parties. Political party is not a charitable organization, and therefore they will be disallowable. The donations was for the year 2020 of 142. Gifts from relatives, we know those are allowable expenses, so I will list them as allowable expenses not yet deducted. Contingent liability, those are future, so they are disallowable. Contingent liability should be a disallowable expense, which was of 1,000, and these they relate to year 2022. Rent paid on behalf of a close friend. He is paying the rent on a close friend. This is a private rent, which was paid in 2022 of 6 or 5. We have the living expenses. Living expenses, they are also disallowable. So living expenses were of how much? Living expenses here we were given, estimated in year 2019, they were 800 and have been increasing at 15%. So 800, we will have to increase it by 15%, 1.15. This will be 920 multiplied by 1.15, 1058 multiplied by 1.15, 1216.7. From there we have the capital allowances. So I will less the capital allowances. Now capital allowances we were given for each of the 4 years was 920. So you less 920, 920. They also less for the 9 what? 920. And then the gifts to the relative. That is an allowable expense to relatives. Allowable expense is not yet deducted. To the relative, it was in the year 2021 of 840, year 2021. So with that, we can now get the taxable income. Can now get the taxable income. Taxable income. Taxable income will be, this is now the negative 20. So minus 20 plus 660 plus 396, 142. Here it is 1178. The one is 5008, 726, 450, 35.6, 6, 1058, 920, and 840. This is 5467.6. 1759 plus 798.6, 479.16. 1,605, 1216, 7 minus 920. This is 49, 38.46. They wanted the taxable income, and that is the taxable income for each of the company. On Roman number 2 there, of the same question, on Roman number 2 of the same question, you are to, the specific actions that a tax practitioner should undertake upon irregularity in, I think in the other class I was able to explain to you on the actions that practitioners should do, tax practitioners should do on discovery of the same. So we'll do more to that on Thursday, as we'll be finalizing Thursday from 6 to 8. Can have another revision during that time. We conclude. So let's meet at that time for another session.